Is Amazon stock still a good buy for you? Today, we're breaking down one of the most well-known companies in the world. Whether you're an experienced investor or just starting out, we'll cover everything you need to know about Amazon, from their financials to their growth outlook, risks, and opportunities. Let's start with a quick overview. Amazon, founded in 1994 by Jeff Bezos, is headquartered in Seattle, Washington, and operates across three main segments: North America, International, and Amazon Web Services, or AWS. Beyond being the leader in e-commerce, Amazon has built a diverse business portfolio that includes cloud computing, digital streaming, and artificial intelligence. It's their ability to innovate and scale that keeps them ahead of the competition. Now, let's talk numbers. In Q3 of 2024, Amazon reported $158.9 billion in revenue, a 7.5% increase from the previous quarter, and up 11.75% year over year. Their net income also surged to $15.3 billion, a whopping 55% jump compared to the same period last year. This impressive growth is backed by Amazon's high-margin businesses like AWS, which contributed 60% of their total operating profit, despite making up only 17% of sales. However, one red flag is their price-to-earnings ratio of 44.26, which suggests the stock may be overvalued compared to its peers. Insider selling activities also raise some concerns about near-term confidence in the stock. Amazon stock is up nearly 13% over the last month and 47% in the past year. So what's fueling Amazon's growth? The first big driver is AWS, their cloud computing segment, which grew 19% year over year in Q3. Second, subscription services like Amazon Prime saw an 11% growth, and advertising revenue is also up 19%. These high-margin areas are key because they significantly boost Amazon's bottom line. In fact, Amazon's cash flow from operations has skyrocketed in recent years, allowing the company to continue investing in future growth areas like artificial intelligence. Now, let's address the risks as well. While Amazon is investing heavily in AI, $8 billion to be exact, it's competing in an arms race with rivals like Microsoft and Google. Regulatory scrutiny is another hurdle, with the US Department of Justice keeping a close eye on tech giants' investments in AI. When we think of Amazon, we think of fast, reliable delivery. And that's no accident. Amazon has built one of the most sophisticated logistics networks in the world. And this is a major driver of its competitive edge. From automating warehouses with cutting-edge robotics to deploying electric delivery vans for last-mile delivery, Amazon continues to innovate. For example, its same-day and one-day delivery options are now available in more areas than ever, setting a standard that competitors struggle to match. But it doesn't stop there. Amazon has been investing heavily in renewable energy, with the goal of making its operations more sustainable. Their logistics fleet is incorporating electric and hybrid vehicles, which not only reduce costs in the long run, but also align with the global push for eco-friendly operations. So why does this matter to investors? Efficiency in logistics lowers costs, improves margins, and ensures customer loyalty. It's the backbone of their e-commerce dominance and a critical part for the company's growth strategy. Artificial intelligence is shaping the future of business, and Amazon is right in the thick of it. Through its cloud computing division, AWS, Amazon is a leader in providing the infrastructure that powers AI innovations globally. AWS supports one of the most advanced AI training and deployment needs, making Amazon a critical partner for companies developing AI solutions. The $8 billion investment in Anthropic, a leading AI upstart, underscores Amazon's commitment to this space. With this partnership, Amazon is not just funding AI development, it's solidifying AWS as the go-to platform for training large language models and generative AI tools. So what does this mean for investors? AWS already accounts for 60% of Amazon's operating profits, and the rapid adoption of AI is likely to accelerate this growth. Additionally, AI technologies have applications across Amazon's ecosystem, from improving product recommendations on its retail platform to enhancing logistics efficiency through predictive analytics. While competitors like Microsoft and Google are also making big AI plays, Amazon's unique advantage lies in its ability to monetize AI both through AWS and its own operations. For investors, this positions Amazon as a major player in a market that's expected to grow exponentially over the next decade. These innovations in logistics and AI show that Amazon is not just a leader in e-commerce, but also a company at the forefront of the next technological revolution. If you're enjoying this deep dive into Amazon and want more straightforward, easy to understand stock analyses, make sure to hit that subscribe button We break down the numbers, trends, and opportunities behind the biggest companies and some hidden gems so you can make smarter investment decisions. So don't miss out, subscribe now, and let's grow your portfolio together. Let's talk about their financials. Amazon's numbers aren't just impressive. They tell the story of a company positioning itself for sustained dominance in e-commerce, cloud computing, and beyond. Amazon's revenue has surged from $469.8 billion in 2021 to $620.1 billion on a trailing 12-month basis. This consistent growth shows the company's ability to not just weather challenges, but thrive in a competitive environment. More importantly, gross profit has grown even faster, from $197.5 billion to $300.2 billion, because Amazon is shifting to higher margin businesses like AWS and advertising. This explains the rise in its gross margin from 42% to over 48% today, a key metric of operational efficiency. Operating income is where Amazon's transformation becomes clear. After a dip to just $12.2 billion in 2021, it skyrocketed to $60.6 billion TTM. That's not just a recovery. It's a signal that Amazon is mastering its cost structure while expanding high-margin segments. The result? A much healthier operating margin, up from 2.38% in 2022 to nearly 10% now. For investors, this indicates a company that's becoming more profitable as it scales. Even as Amazon grows, it's managing its expenses wisely. SG&A costs have risen modestly, in line with revenue, while R&D spending, though still substantial, has been trimmed from its 2023 peak. This balance between innovation and cost control shows Amazon's strategic discipline, ensuring it remains competitive without overspending. Here's the headline. Amazon has gone from a $2.7 billion loss in 2022 to a $49.9 billion net income TTM. That's a massive turnaround, driven by efficient operations and growing cash flow from high-margin areas like AWS. This translates to a net margin of 8.04%, up from negative territory just 2 years ago. For shareholders, this isn't just a recovery, it's a sign of a company firing on all cylinders. Their earnings per share also rebounded, from a loss of 27 cents in 2022 to $4.68 TTM. This rapid growth in profitability means that Amazon is delivering real value to its shareholders. For long-term investors, it's a clear signal that the company's growth investments are paying off. So what do these numbers mean for you? Amazon's financials show a company leveraging its size and innovation to not just grow, but grow smarter. Higher margins, disciplined spending, and soaring profitability indicate a business that's building a stronger foundation for the future. For investors, these trends highlight why Amazon remains a key stock to watch. To wrap it all up, Amazon is clearly a powerhouse with robust financials, strong growth in high-margin segments, and a promising outlook for AI and cloud computing. However, the high PE ratio and insider selling suggest caution for short-term investors. Long-term investors, however, might find Amazon attractive, especially with analysts forecasting a 28% annual earnings growth over the next 3 to 5 years. My take? Amazon is a hold for cautious investors in the short term, but a compelling buy for those with a long-term horizon. What do you think about Amazon stock? Are you buying, holding, or sitting this one out? Let me know in the comments below. If you found this video helpful, don't forget to hit that like button and subscribe for more stock analysis. See you in the next one. And as always, happy investing.